I think the more important issue is what is the language in the statement that accompanies that rate increase. Do they take a more dovish tone? Do they open the door to a slower pace of rate increases next year? Remember, in November, we did see a number of Fed members talk about being less comfortable, I should say, with that gradual commitment to additional rate increases.
We know what it sounds like when doves cry. Okay, we learned that. What does it sound like when the Fed goes dovish? What would to you be a dovish statement? That we're close to neutral? Because they're not going to come out and say we're done raising rates.
No, they're not. They're going to use some Fed speak, and I think they're going to take out the word gradual, because gradual to the market has translated into a commitment of 25 basis points every 3 months. So by removing that and maybe putting in more data-dependent language, they open the door for a slower pace of rate increases. Now, again, it doesn't mean that there's a commitment to an outright pause at the next viable meeting, but it does say that we're willing to watch the data and we're not necessarily going to move forward with an additional 25 basis points 3 times next year.
Watch for the elimination of the word gradual. Watch for more talk about data dependence. Okay. The market is expecting a rate hike and a dovish statement.
Exactly.
So we have to assume that expectation is built into where the stock market is right now.
Yes.
What happens if we get a rate hike and a hawkish statement? What happens if we get no rate hike and a dovish? What if Jay Powell starts crying or screams and runs out of the room or quits? What happens if we get something other than what we're expecting?
I think if we see a hawkish statement, or if the statement is perceived as more hawkish than anticipated, we could see additional downward pressure on equities, because what this is going to say is that the Fed is ignoring the data, which suggests that we are seeing very clear weakness underneath the surface and a very clear trend of disinflation. So if we continue to see very hawkish language, it sends the signal that the committee is still seeing the economy on relatively solid footing. They're willing to move forward with additional rate hikes and most likely, as Feds before them, move beyond that neutral point and potentially tighten us into recession.
I put out a poll to our viewers asking what they think is going to happen. A couple options: rate hike, dovish; rate hike, hawkish. I would have answered my own poll, no rate. I don't think the Fed will raise rates today. Okay. I know that I'm in the minority. But what happens if they don't raise rates but have sort of a neutral tone? What if they don't do anything?
I think at this point,
first off, would they lose credibility?
That's exactly what I was going to say. I think the Fed does lose credibility with the market if they back away from essentially a promised rate increase. At this point, Fed members have been talking up an end-of-the-year rate increase. We saw as early as November, or as recent as November, Fed members talking about an additional rate increase soon, which in Fed speak is assumed to be that December meeting later this afternoon.